And good afternoon. Welcome into Market Talk for this Friday, February 25th. Great to have you with us once again. Thanks for making us part of your day as we look to round out our work week. Find us online, markettalkag.com. That's our home on the web. I'm your host, Jesse Allen. Thanks again for joining us. You can find all the latest news of agriculture, all of our streaming sources, social media, and much more. It's all online, markettalkag.com. Well, plenty to discuss in the market trade as we wrap up the week. We saw prices in the grain markets get hammered lower on the day, even saw weakness throughout livestock as well. A lot of things going on with the Russia Ukraine situation and much more. Here to join us and talk to us about everything going on in the world of agriculture. He is a professor of economics, crop market specialist with Iowa State University and ISU Extension. Our good friend Chad Hart joins the show today. Chad, great to have you on, sir. How are you?
Oh, pretty good. How you doing, Jesse?
I'm doing good. Thank you very much. As I know you've been very busy, as has everyone in the world of agriculture here the last couple of days, just watching the way these markets have reacted to everything going on around the world. Specifically, I think the Russia Ukraine situation's been the big driver here this week. And, Friday markets really getting hammered, but I want to talk a little more big picture here. And obviously, a lot of volatility has been going on in these markets for quite a while. And undoubtedly, we're going to see more volatility moving forward. So, just your general thoughts here. Let's get the Russia Ukraine stuff out of the way first. I mean, what is this all really going to do for our markets moving forward? I would assume there's just a lot of unknown right now.
There's definitely a lot of unknown, and you can think of it as the markets had already been preparing for this over the past couple of months. We had seen the troop build up, we'd seen the news stories, and I think when you look at what the crop markets, especially corn and wheat, they had been ratcheting higher over the past couple of months, knowing that hey, if we do get war in Ukraine, it's going to lock down some of those Black Sea supplies, shortening up global supplies, and that tends to mean higher prices. And so we worked that into the markets the past couple of months. But now that the war is here, as you say, that sort of ratchets up the level of volatility here. And so we're going to see some major swings across all of our agricultural markets as we work through the next few weeks, trying to figure out how this war is actually going to play out and what that might mean, especially for agricultural trade over the next couple of months.
Well, Chad, I mean, as a farmer, trying to trade these markets right now, it almost seems borderline impossible. Just the wild swings. We see a big run up on Thursday in a reaction, and then a pullback a little bit, and then Friday's big sell off. A lot of profit taking in this market. I mean, as a farmer, if I look at this as a whole, yes, there's great value on the board, but with computers amplifying the moves one way or the other, it just seems very hard to trade this environment right now.
Well, it's hard to trade it, but well, I guess it depends on how you want to look at how you want to trade. And I'm going to go back and tell farmers, here's where we can't get caught up in the day-to-day swings. I would argue if I'm a farmer, what I'm looking to do is make sure that I'm making sales that, help cover, they cover the cost on the farm, they give me that profit potential I need to go forward, and then I can lock some of that in. And so rather than getting caught up in the day-to-day swings, I want to look and say, hey, is the market offering me a really good price right now that I can either lock in through a futures hedge or utilizing options or maybe even a forward contract, a forward sale, where I know I'm locking in a profit potential that makes sense for me without trying to sit here and play, okay, is today the day that we're hitting the top? Well, it's really hard to hit the top, but I know I can sit here and go, whether it was Wednesday, Thursday, or here even Friday, even though we're in a down market, I'm still in a really good pricing environment that can, you know, pay the bills and, leave a little profit out there as well.
Well, Chad, as well, I think we got to look at this Black Sea region, not to mention corn, wheat, sunflower oil, things of that nature that could get disrupted here. But fertilizer is another big thing as well that we could see disruptions. And we've already seen extremely high fertilizer prices. And that's really, shaping up or one big part of shaping up our acreage battle here for this year in the U.S. But your thoughts on just what we could see in regards to fertilizer with all the impacts going on in the Black Sea region. Any thoughts there?
Well, that becomes a big question, and especially as we look at, the main ingredient to our nitrogen fertilizers is natural gas. Russia is definitely a large exporter of natural gas. So again, as these sanctions because of the war tighten up here, I'm really watching to see what does that do to natural gas prices because that's going to bleed right into what we see in terms of fertilizer prices.
Well, as well, on top of all this, I mentioned fertilizer really shaping into our acreage battle. We got the USDA Ag Outlook Forum here to end this week and got projections from USDA for planted acreage and how big this crop's going to be. And I know that soybean number came in a little lower than folks thought, but it seems like the trade really just kind of, I mean, looked at it, maybe took it into account a little bit, but almost kind of brushed it aside with all the Russia Ukraine news. But switching gears to talk Ag Outlook for, what do you make of those numbers? I know some folks don't put a lot of stock into them, but what do you think about those numbers?
Well, I think you need to look at them, and let's face it, in a normal year, nope, that would have been the main news story. But yeah, just so happened that the war in Ukraine started at the same time the Ag Outlook Forum started. And I think what I looked at there was, I like to compare those numbers coming out of the Ag Outlook Forum to those long-term projections that USDA released a couple of months ago back in November, because that gives you a sense of how have they adjusted their 2022 outlook over the past couple of months. And on the acreage side, what they basically said was, they didn't move the corn number any. They had said 92 million acres back then. They're saying 92 million acres now. And fertilizer was the main argument there. Back then, they said 87.5 million acres of soybeans. Now they're saying 88. So you can see a little bit of a bump there, but not much. And then they said wheat coming in at around 48. So they've stayed fairly consistent in terms of their outlook as they're looking at acreage there. My own sense, though, is I'm leaning a little bit more towards the corn and soybean side than on wheat, and it comes back to this discussion about fertilizer. While we are concerned about fertilizer reducing acreage moving forward, I also know a lot of fertilizer was applied this fall. And if I applied fertilizer this fall on that ground, I know that ground's going into corn. So I think corn may, if you will, hold on to acreage better than USDA is saying right now.
Well, and to your point as well, I've heard a lot of that also, a lot of fall applied fertilizer, a lot of ground going to go to corn. And, I think folks aren't really concerned about the I states, giving up quarter acres to beans, but it's more the quote unquote fringe acres, the northern plains, a big area, a big question mark right now. Will they plant spring wheat? I mean, wheat takes fertilizer as well, but I mean, will we see soybeans up there? Will we see more corn acres? I've even heard some rumblings of some corn acres in parts of the northern plains. So, what are you hearing as you talk to various farmers across the country and talk to folks across the country as we're getting closer to spring planting?
Well, I would agree with you that, the I states stay actually fairly consistent when you're looking at our planting patterns, whether we're looking at a low price environment or a high one. It is the Southeast and the Northern plains that really do move between the crops. Down in the Southeast, I know we'll see probably some additional acres headed into cotton, for example. But to me, the main storyline will probably be the Dakotas. As you mentioned, the idea is that we could look at spring wheat there. We've seen, soybeans and corn have moved up in that region. And you mentioned sunflower oil, for example. I think the vegetable oils in our oil seed complex, those are really hot areas right now. And let's face it, North and South Dakota, that they can grow alternatives to, they're not just corn, soybeans, wheat. They can do sunflower, they can do canola. So we can see a lot of crops enter that mix. But I'll go back to sort of what's the trend been over the past few years. It's been, as I look at the Dakotas, decreasing wheat area, increasing corn and soybean area. And I think even with these higher input costs, I think we'll continue to see that trend.
I think another thing to think about as well, of course, is weather. As we go into spring planting, there's plenty of areas in the U.S. still showing up on that drought monitor. And I know folks there at the university and the Midwest Climate Hub there at Ames as well. They talk a lot about this. And what are you hearing as you travel around? I know you've also been on the speaking circuit here the last couple of months. What are you hearing when it comes to weather? Are folks still too dry? Are they getting enough moisture? I mean, what are we thinking about on that end of the spectrum as we go into spring planting?
Well, I think here we again got to go back to last year and think about as you look at the drought monitor today, it's eerily similar to where we were about a year ago. And so the 2021 crop, we dealt with drought problems mainly in the western US, but it turned out that by the time we added everything together here this past fall, we had a record corn crop, a near record soybean crop, despite the drought problems. And I think a lot of farmers going into this year are saying, hey, if we did it last year, we can probably do it again this year. And so that's another reason why I'm not expecting big shifts in land right now because we sort of, I won't say proved, but we showed that it is very possible that, yeah, we can start out a year dry and still produce a really big crop. In fact, I had one farmer remind me of this old statement, plant in the dust, bins will bust. So I think a lot of producers say that's sort of what happened in 2021. Let's roll the dice and see if we can do it again in 2022.
Chad, I want to talk to you as well about the farm economy in general. I know USDA's Economic Research Service released its 2022 farm income forecast here during the Outlook Forum, saying net cash farm income forecast to increase 1.4% relative to 2021. Net farm income forecast to fall 4.5%. So, I mean, we get those numbers out, but then we think about all the inflation concerns and where commodity prices are at and the cost of inputs, et cetera. What do you think about the farm economy as a whole and the general, health or lack of health of the farm economy as we really dive into 2022?
Sure. And I would say what we've seen here is, let's face it, go back to 2019, and the farm economy was struggling. We were, taking it on the chin. 2020, we improved, but that was due to government support. 2021 was really the year of the market charging up for us and creating some of the strongest, farm economy numbers we've seen in a while. And USDA's forecast in 2022 says, you know what, we may be able to hold on here for a little while. Yes, costs have increased, but we've seen revenues increase almost to match. And that's a really good spot for farmers to be in right now. The challenge here will be okay, we see the potential for more cost increases, especially as we mentioned, fertilizer, what might happen there as the Ukrainian war goes on. If we do get that higher cost, then it's again, can we get higher revenues to match? Well, let's face it, our markets are sort of challenged right now in that we're pricing crops at a very high level right now. That's eventually going to start to wear down that demand, especially as we look internationally. Falling back on another old adage, what's the cure for high prices? High prices. We do tend to see that, high prices, if they last long enough, wear down our demand and then wear down those prices over time. So I think that's the issue here. USDA says we've got another good year in front of us, but there are some challenges starting to rise up on the horizon.
Well, and thinking of that export demand, I mean, obviously China has been a big player. A lot of people talking China. We've seen China buying soybeans a ton here lately, and undoubtedly probably gonna see them come in here on this break in price to buy cheaper soybeans, waiting for corn exports to pick up here. Obviously, watching South America's crop. We haven't even touched on that yet, and some of the drought issues there. So, I mean, in the short term, it looks and feels to me like our export demand in the US is going to be fairly healthy here over the next 3 to 4 months, just with all those various factors at play as well.
Yeah, and that's definitely the case that we found. In fact, you think back, USDA, I think it was earlier this week, released that, in terms of value, the 2021 calendar year was the best export year ag has ever had. And that's because it's not that we were necessarily shipping more in 2021. We were actually shipping a little less, but it was at a higher value, a higher price. And so as we're looking here at 2022, it's a mixed bag. USDA says corn exports will likely come down a bit, but we're looking at a higher price. On the other hand, soybeans, they're saying, you know what? We may actually see those quantities go up a bit, even with this high price. And so I think, USDA again is signaling at least here for 2022 and especially the first half, yeah, we're likely to see strong export numbers out there. It may not be, strong in terms of the number of bushels, but when you take this high price times those bushels, those dollars do add up.
Chad, I want to give us time for the livestock markets as well today. Hog market, 3 straight days here of pressure to the downside. I'll just ask simply, is this hog market too overbought and finally correcting? What do you think there?
That you got a little bit of that going on here, as you mentioned. There's some profit taking going on here near the end of the month. I think this is also a reflection of, let's face it, these high corn and crop prices. That's high feed costs, and so that is really eroding those margins for, well, not only our hog industry but all across the livestock complex. That, anytime you start to talk about $7 corn on the horizon, that definitely does tend to wear down those livestock prices.
On the cattle front, we've held together a little bit better on Friday. And, but again, kind of the same story with you just mentioned with high feed prices, but also, it feels like maybe a little consolidation has been seen throughout this cattle market here in recent weeks. But I still hear folks a lot of optimism, whether they're talking cattle or hogs, just with potential demand here in the US, at least as we get into the summer months with COVID starting to kind of wane away and just more demand out there, restaurants, et cetera, et cetera. It feels to me I hear plenty of optimism when it comes to our entire livestock market still out there, and maybe a little more specifically on the cattle market.
Yeah, I'd say a little more to cattle market, and I'll take you a little different direction. When you think about that export picture, beef has been one of those indicators that we continue to see year after year larger quantities of beef being in that export market. And so again, it's this case, if I could sell higher quantities at higher prices, that's a wonderful thing in an ag market. And that's where beef has been, 2019, 2020, 2021, and so far still here in 2022. I'm looking at the pace we're on right now is a record pace in beef exports and at a very strong price.
And I know as well, Friday afternoon after the close, not out yet while we're talking, cattle on feed report. I'll be interested to see if USDA throws us any sort of curveball that can maybe, move this market one way or another heading into Monday's trade. It seems like they like to do that here as of late, Chad.
They do like to do that as of late, but I mean, I'll say this on the livestock side, they have been fairly consistent in saying that whether we're looking at the beef or the pork industry, that we have seen a little more consolidation over the past couple of years. They expect that to continue as we look forward into 2022, but they're talking about relatively small cuts in production, for the most part, less than 1%. So it's not that we're seeing a big pullback here, but more of a, let's call it a steadying of the ship here. We're not looking to really expand, but we're also not looking to really contract.
Well, Chad, we've talked about a lot of stuff here today on the show. And before we run out of time, floor is yours. Anything we haven't touched on that you want to mention here today?
Well, I'd say the other thing is, and we sort of hit this point before, but I want to hit it again. Yeah, there's a lot of volatility and sort of turmoil in the markets, but for the most part, when we stare at whether it's the crop or the livestock markets, right now we do have some good opportunities out there. Yes, costs have risen, but our revenues right now are fairly strong and sort of across the board. And so ag has been on a good run, especially here over the past 18 months. And right now, even though we are facing increased volatility, we're still in a relatively good spot here. That offers some opportunities for farmers. Our crop farmers are getting ready to, here in, a couple of months, they're going to be planting. They've got some good opportunities to lock in some price protection. As I'm looking at our livestock guys, what we're seeing here is, yep, I see these higher feed costs coming, but we've also got some pretty good, strong prices out there as we look at our lean hogs and our live cattle markets. And so there's opportunities to lock in some margins on what could be a very volatile year.
Well, we appreciate the time with that. Professor of Economics, crop market specialist at Iowa State University, Chad Hart. Thanks for joining us, sir. We'll get you back on the show real soon. Have a great weekend.
Thank you very much. Have a great one yourself.
That's Chad Hart with Iowa State University joining us today on Market Talk. That's going to do it for the show for this Friday, February 25th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.